Hey, this is Mike Drop 5, and I'm responding to some requests for me to take a look at the price action on the S&P 500, as well as some long and short setups that I might be looking at. So I will tell you right off the bat, I have two tabs open right now. One is screening for longs, the other screening for shorts at the moment. And then also I have a page open for the S&P. But I'll just real quick, this is really interesting because the longs that came out of my screener, and it's just the opposite, things that I put in for the shorts. I got 3 pages of potential long setups. Looking through these setups, there's literally only one, maybe 2 that I like here. The rest, in my opinion, I just wouldn't take, especially when you go to the weekly, which I like to do, because that really gives you a more reliable sense of trend. But anyway, we're going to take a look at, so these are the longs, maybe 2 results out of 3 pages, right? And then we come over here to the shorts, which are here, and look at all these gorgeous short setups right now. Just beautiful short setups. And this is just the dailies, but when we click into the weeklies, you'll see it even more so. And we have 32 pages of results. I mean, that's pretty striking, right? So at the moment, risk reward in terms of entering a trade, you have way more options in the short direction right now than you do in the long direction. And is that significant? I think so. I happened to notice the opposite happening a month ago when we kind of bottomed there. There was a lot of people that are calling this the bottom. I tend to reserve that because I don't think we've hit the bottom yet. But anyway, I think we're in a bear market rally. Just one man's opinion. But anyway, we're going to look at these short setups, and there's a whole bunch of really good ones here, like juicy ones. Now, seeing as though smart money trades with a very, an eye on risk reward, they're going to be seeing these setups as the ones that are like worth the risk reward, not these measly long results that came through that are like really not that great of setups. So the really good setups right now are here in these 32 pages of shorts. So I tend to think that this is going to be a great place for smart money to come in and start picking up some good short setups with really, really tight risk reward. Like the risk is going to be really small. And, I'll grab the longs that look good as well as a bunch of shorts that look good personally, because I'm always trading good setups in both long and short directions. And then I just weight it in terms of what I see with the S&P. Now, let's just take a quick look at the S&P, and then I'll go through these settings in a minute and show you how I set this up in the screener. But the S&P right here, whoops, that's a trade I'm about to take. The S&P right here, we're on a monthly right now. I'm looking at really wide time frames. Definitely a downtrend, and I don't mean that like in the obvious sense. I mean that in the technical sense. We got below, well, technically this, definitely you could argue this, getting below that was very significant, puts us into a more wide, longer term downtrend. And we haven't really seen capitulation in that downtrend, in my opinion. However, up until now, I mean, this entire year, I've been like heavily net short. I've been very bearish. Now I'm still more bearish than not. However, the weekly close was kind of interesting. It gives me a little bit of ambivalence because the weekly close on the S&P was significant in that it gained a very significant level. And so when we look at the weekly, let me zoom this out a little bit. Sorry for all the lines. I drew those like over the last year. Just haven't deleted them. So this right here, so gaining this right here, this weekly close was very significant from a trend point of view. And I will put a link to a Trader Sumo video that really helps you understand the concept of technically defining trend and technically defining when trend has been violated and you have a new trend starting. So It's an important thing to differentiate a retracement from a trend shift. Most traders have no idea how to tell the difference. But on the weekly, we are now in a local uptrend. So I don't know where this is going to go. I don't know where it's, going to terminate. I still feel like we are going to see lower lows, but I could be wrong. And I am now keeping an eye on the weekly and the monthly timeframes because this gives me a little bit of more uncertainty now. Having said all that, I'm taking good setups both in long direction and short direction. So, but at the moment, it would not surprise me based on the fact that this is a significant monthly level as well as weekly level, and it's resistance now, and because of the fact that the pages of results that we got show clearly that there are extremely good short setups right now, and smart money is going to find those, and that's going to affect markets. I kind of think we're going to reject here or possibly here and go lower. Now I could be wrong. It could just moon, do this bear market rally up to here. Who knows, like how much irrationality is left in this market? I don't know. But, anybody that thinks that we're just going to go back to normal where, stocks just go up, is ignoring the fact that we are experiencing 40-year highs in inflation. We are in an uncharted territory. We are in new waters, and the housing market is starting to go down. Inventory is starting to swell. I think we're going to see definitely a correction in the housing market. So ominous clouds on the horizon. Anyway, with all that said, and you can interpret that stuff how you like, and maybe you disagree with me, that's fine. Having said all that, this is significant resistance. So I think a move to here is more likely than not. And I could be wrong again, but with all that in mind, and with the fact that there's 32 pages of setups in the short direction here, not all these are going to be perfect. You have to go through, look at the price action of each ticker, and then look at what you would think regardless of what the S&P is doing. But the point is that there is a plethora of very, very good setups. I mean, some of these just look like, let me just check some of these out real quick. Yep. Beautiful. Oh my God. Yeah. Oh, I'm taking this. Yep. This is beautiful. This is right where it's supposed to be. Maybe just a tad bit higher. I'll run the risk reward tool on this, probably scatter orders from here to the bottom of that body right there, and with a stop at all-time high here. And I can only imagine that will work out very well on the risk reward tool, because here's your first PT. So that is a good looking trade that I will take. I mean, I can just go through these, like they're just everywhere. I didn't look at that one prior to making this video. I just clicked on one. It's just like, it looks great. There is one that I did look at. Where is it? Okay. So this one, let's go to Trading View on this one. I mean, you can see it here, but I really want to get into this one a little bit. So this is my setup, the way I've charted it here, and what I plan to do. As you can see, pretty much from like the top of this candle body here, I think is your kind of lower end of the entry. But running the risk reward tool, if you scatter across this zone, your risk reward is 4.11 to first PT. This is the obvious place for your first PT, and this is the obvious place for your stop loss. So you can't really change those. This can kind of change. This is like the one place you can change. So if you wanted to enter here at the line where I think it's actually going to hit and reject from, you're still at like around a 3 risk reward, which is, by anyone's standards, especially people that are smart money, that are trading with risk reward in mind, this is still a very, very good trade, even here. So I would want to definitely have orders down in the lower end of this box and then scatter all the way up to here. So, but this is, I mean, I almost want to short this just based on the ticker, because like, come on, bro, like really? You're going to name your ticker bro? Anyway, this is the first PT. So yeah, this trade I'll probably add some puts on this when it gets into the higher end of that range, but I'll wait a little bit for to make sure I'm getting, you know, the implied volatility is not going to be too heavy on the put. But on a short, just on like regular shorting it, yeah, this is your range here and your stop loss, not yours. I'm not telling you to take this trade. Trade it at your own risk, do your own research, but I'm taking this trade. Let's go on to, I guess that's kind of it. I'll go through a couple more pages just so you can see, like, this would be like the only long setup I think that looks decent right here, because the risk reward is so nice right where it's at to here is like such minimal risk for first PT being right here. And so that's definitely going to pencil out. I don't need to run the tool to see that one. That one's just easily going to be over a 3. So BFAM would be a long for me. And the way I just run it is I take good long setups. I take good short setups all the time. I weight my majority of my portfolio in the direction I feel the S&P is headed in the short to midterm. And that's how I trade. The price action stuff, I'll put the link in the comments below. And you guys can go ahead and just click on that and learn a little bit more about trend starts and how price action traders actually are seeing this stuff. It's not patterns. Like, real quick, back to the other one that we were looking at. This is a Quasimodo pattern. This bro short here is a beautiful Quasimodo pattern. So if you're a pattern trader, you can see that. You might also call this a diamond reversal or something like that. But from a price action perspective, we look here, then my eye goes here, and I go, that's the most important level on this chart as far as I'm concerned for a short. And this was a very significant move here. Price returns, and I expect it to come back to here. Now, this being 3 risk reward is possibly where it will terminate, right in this range here, right, probably on that red line. But it could pump a little higher and go up into here, so I'm scattering orders up there, so that if it does go all the way and hit my stop loss, well, at least it was positive 3.0 or above risk reward. All right, I've been rambling. I almost forgot to tell you guys how to set up the screener. So we go here to finviz.com, and I'll explain this real quick for you. We go to screener here. I did this in the last video, but I'll do it again and give you one little change in it. So market cap, I go plus mid usually. If I need more results, then I'll take that to plus small. But I do want some fair liquidity in this stuff. So I do that. I come over here to industry stocks, go to technical. This is where the magic happens. We go week up, quarter down, and 52-week high-low is 0 to 10% below high. Why would I do that? Because if it's in a quarter down, it's like starting to top, it's starting to move downward, but we have a week up, which is like that last little death throw where the best short entries are. 0 to 10% below high kind of ensures that scenario a little bit. You can eliminate this. If your results are not giving you any good results, just do this. You'll get more results. More of them will be trash, but a few nuggets might slip in there too. So week up, 0 to 10% below high. And then we come over here to charts, click this, and we see all these beautiful setups, most of which are good short setups. Not all of them. I mean, definitely not all of them. And if you guys know any ways of, of screening that is more efficient for looking for shorts or longs, I'm totally open to hearing that and learning from you guys as well. Let's go here. Let's go. Oh, this one looks interesting. Okay. Let's go to the weekly. It's almost like bro, but it's more like brah. It's brah. Yeah, this is this is great. I don't know whether you consider this the high or this the high. I think technically this would be the high, but they're both so similar. You could say this is the move that produced it. You could say this is the move that produced it here. Either way, you got below it down here. So our signal is in, return to the highs to reject, and most likely this is all just probabilities. Like, we use stop losses because this stuff doesn't always work out, right? But this is as good a risk reward as I think you could hope for right here. I mean, there's your stop loss. You could go even a little higher. You could like scatter some orders above there in case it wicks slightly higher and throw a stop up here. Although when you do that, you tend, you know, sometimes you'll get slippage, and I don't know. It's probably better just to make your entry right where it's at right now and just put your stop here, because it's such a tiny risk, such a tiny little stop loss. If it gets hit, you've lost almost nothing, and you I'm sure it's like probably over 6 the risk reward right now to this first PT here, or you could even make this your first PT here. But that looks great. I'm into this one. I'll take this trade too. I mean, it's a little scary because this, normally you want to see a little bit of a wick at the top of that close. I mean, this indicates they might be pushing a little higher, but hopefully just very slightly higher. Anyway, who knows? We'll see. Maybe I get stopped out. That's okay. All right, guys. If you have any comments or any other tips on screeners and how to screen for this stuff, longs or shorts, I would love to hear it. And happy trades. See you later.